Tackle today, Matt and Mark Justice Brothers from Tackle Trading, bringing you all of the charts, the news, the individual stock stories in a concise manner so you can be well prepared in just a few minutes each and every day. Before we get started, would like to pitch our upcoming Master Trader event. This is a fantastic event where you can learn the foundation of technical analysis. Technical analysis has played a huge role, Matt, in the stock market the last few days. Those who understand technical analysis have had an edge. They've made better decisions. Go to that Master Trader link, sign up for that class, sign up for that 15-day free trial. Matt, listen, all-time high, S&P 500. Break it down for us.
Yeah, we're obviously talking about a technical condition here, and like we've been breaking down over the course of the last few weeks, the most important read we have in the market right now is from a technical perspective, and we're talking about a potential breakout in front of the central bank. We're above that 565 handle, and as you can see, that is a breakout with confirmation if it does close above that level. And so the market is front running that 50 basis point cut here, Mark, and you're obviously seeing a front running breakout going into that cut. The market's putting a little bit of pressure on the Fed here today with front running that breakout, saying give us that 50 basis point. If not, we could be in line for a little bit of a snapback back down to that 90 EMA.
Yeah, no, listen, it is going to be a topic that we are going to cover extensively in our pro community. We'll talk about it on Tackle today. Big event on the Fed. We're going to talk about it here in a few seconds. Will you just give me RSP real quick before we move on? Because S&P breaking out, which is very tech heavy. We got some really good tech news, but RSP shows you how strong this 5-day rally has been into the Fed. Anticipating larger cuts. This is pretty heated coming into the Fed, isn't it?
Yeah, and quite frankly, regardless of the index you're looking at, in the newsletter this past weekend, we talked about how all of the markets are running on the exact same gasoline right now, and how you should treat, regardless of the pattern going into the potential breakout, you treat them as potential breakouts. And so with the Qs here, you got to break out of a symmetrical triangle with RSP. You got to break out of an overhead resistance level, and the SPY, you're looking at a breakout out of a multiple time frame situation. And so you have different patterns on all the indexes right now. But over the last 5 days, and we talked about this in the newsletter, we talked about this yesterday in Tackle today, we talked about it all week long last week in our Traders Lounge. The markets are running on the same gasoline right now. It's having a macro moment. It's not having an individualized stock moment. This is all about the Fed, and it's all about the Fed coming into tomorrow. And so the markets are primed and ready to rock and roll. We'll see if the Fed participates in that, or if they throw a little bit of cold water. But as of right now, I don't see a substantial difference in the indexes.
Yeah, and then those will eventually separate, and we'll chronicle that in all of our product lines.
I fully anticipate markets running on the exact same gasoline going into the Fed. I fully expect the algorithms to start separating, and I feel as the conversation happens over the 24 hours after the Fed makes their announcement on Wednesday, I think we'll start to see the early signs of separation, and that's from a top-down analytic perspective, and that's kind of how we break down the markets.
Yeah, listen, economic data today, we had retail sales numbers come out. They were a slight beat on the month-to-month. That's back-to-back months. A lot of worries about the consumer out there in market jargon these days. Second month where they exceeded expectations. Core missed a little bit. So healthy number, healthy backdrop heading into the Fed meeting. But Matt, for me, the real story continues to be just this massive surge we've had in 50 basis point cuts. We're going to find out tomorrow, 2 p.m. Eastern, followed by the Powell press conference. A little bit better than a coin flip on a Tuesday right now.
Yeah, and you can really kind of see it on the technical side too, with the market 5 straight days up here off that 540 pivot point we analyzed from last week. It's obviously pricing in a 0.50 cut here, and oftentimes when the market starts pricing in an expectation and that expectation doesn't come to fruition, you will see a repricing event. But as of right now, it does look like the Fed is kind of locking in a 0.50 cut here. We've seen multiple releases out of Nick Timiraos regarding the potential of a 0.50 cut, and so the market's pricing it in right now.
While we're having a macro week, there are individual stock stories, including Microsoft reminding everyone why they're a pretty decent company.
Well, it's they remind people what you can do with a large moat as they increase their quarterly dividend in between earnings seasons. Even there, Microsoft, they increased their quarterly dividend by about 10%, right north of 10% here today, and then they approved a new $60 billion stock buyback program as well. Obviously, rewarding the investors, Microsoft is, and it looks pretty good. Honestly, Intel's story today kind of has a little bit more interest for me when you're talking about Intel and what they're doing from their foundry business. They're going through a little bit of a restructuring with Intel. We saw some news come out last week on Intel. Now we're seeing it again here today. Following through with that restructuring plan, they also announced an deal with AWS for custom AI chips as well. That was good news coming out of Intel. So two good stock stories coming out of Microsoft and Intel. However, on the NUE core side of the equation, they actually lowered guidance in front of their earnings report, and they did adjust it fairly aggressively to the downside. What's interesting on NUE core, and that's where I want to start with from a technical perspective, what's interesting on NUE core is it didn't really gap down and sell down despite a really big down drop in guidance. The drop in guidance was basically based on where the price of steel has been. Steel's kind of forming a little bit of a bottom right now. You're starting to see a little bit of that bottom form here as well. And so what really stood out to me was the gap down, which is obvious on any drop in guidance. But much like ASO last week, ASO dropped down, came right back up. NUE core dropped down, came right back up. A little bit of interesting price action here on NUE core, where you probably should have seen a gap and sell. When you see a behavioral change, that kind of stands out to me. So
And these behavioral changes, Matt, we saw it on McDonald's in earnings season last time. We saw it on consumer discretionary stocks last week. When you see a bad news story bought up, people,
it stands out.
It stands out, and the market's not trying to trick you.
Nope,
the market's trying to tell you.
Not
on those ones. They will try to trick you other ways, but not on those ones.
Not on a negative guidance story, gap down, and the market buys. There's something else going on there, because a lot of times these things get priced into the market over time as well. When you're looking at Intel here, Intel looks pretty good on a potential reversal. I'd like to see a little bit more time, and quite frankly, I'd like to see a little bit more plans on the restructuring side. But Intel's coming out with some good news, and obviously they needed to go through a restructure. They got some good news out of the Amazon side of the equation. I do think you're going to have to see a little bit more time here, just given the fact that you had such a large drop in price. Even the fastest of the shorter duration moving averages, the 9 EMA here, you're still kind of converging there. But if you break back up above the 9 EMA here, you do enter into a little bit of a pocket there on Intel. Little hard 14 reference there, Chucky. And then on the last stock story, obviously, was Microsoft. They're breaking back up out of a little bit of a concerning head and shoulders formation. I would treat that as a breakout in the starting point of a new trend, quite frankly, when you're looking at Microsoft. And so Microsoft, good story. NUE core, a little bit of an interesting price action. Intel, good story. Market's feeling a little bit froggy here on a Tuesday coming into the Fed on Wednesday.
Yep, absolutely. Let's go to look at commodities as we finish off. Obviously, a Fed decision is going to have ramifications, not just in stocks, but in all markets. Dollar bouncing off support. That support level is going to hold, at least it better, because if it doesn't, Matt, there's nothing underneath.
Well, it better hold. We'll see. They're pricing in that 0.50, so we'll see. We'll see if it does hold. But if it doesn't hold, you're going to love commodities. If it does hold, you're going to like commodities.
Yeah, and just flip through those commodity charts real quick as we close up our show.
Yeah, I'll just say this, Goldman, yeah, you went out on a ledge here today. Goldman released a statement, said, you know what, if the Fed only does a 0.25 cut, we might see a selling price action on gold. And You know what? To the uninformed, that might have sounded like really good analysis. To the informed, it's like that's the laziest thing I've ever seen. Of course, that would occur here on gold if they only do a 0.25 versus the 0.50. You would have an initial snapback on the dollar, which would bring gold back down in that environment. Outside of that, I think gold is honestly, quite frankly, the best instrument in the marketplace. Had a recent breakout out of a multiple time frame perspective, and quite frankly, it's something I feel is needed in portfolios for a variety of different reasons. On the technical side of the equation, I'd like to see real new development post central bank. If you did not love that breakout from last week, when you're looking at silver, you're obviously looking at getting above every single resistance zone. That is a really good look on silver, and any secondary pattern will be playable. When you're looking at copper, copper just continues to improve on their potential reversal. Any close above 4.3 would be confirmation on their potential reversal as well. Finishing up on Bitcoin here, Bitcoin firing off that 200-day moving average. Yet the ranges are getting tighter, but it's still dirty. It's still a filthy environment from a technical perspective, where we're going to have to see a cleanup on aisle 9, and that might take a little bit of time on Bitcoin.
All right, listen, sign up for that master trader event. Become part of this amazing community. It is a great place to learn technical analysis. You need technical analysis to navigate these markets. It's just that simple. Go tackletrading.com, sign up for that 15-day trial, and sign up for the master trader event next week.